Hey, what's up? It's been a while since I posted a video, but I thought this week is no better than any other week to start what I wanted to do, which is weekly trade recaps. I hope to post this every week. We'll see what happens. But the whole reason I'm doing this is because I hope it benefits you in figuring out what I did right and what I did wrong. And if you guys were to enter similar trades as I did, what I saw and what happened afterwards is something important. I believe that we should always go back and reevaluate, right? Did we do the right things? Did we do something wrong? So I hope you could take what I did right and avoid what I did wrong in these videos to help you guys become better in what you want to do. So, this week is pretty perfect. A perfect example of this. We had a really great week at start and almost pretty much throughout until Friday, where I had probably the worst day I've seen in probably 8 years, 6 years. I've not had back to back to back to back losses like that ever. It's pretty rare for me to even have back to back losses on the same day. Nevertheless, on day trades. But it happens. Friday was a day where I just was not in sync with the market, and I fully uh, want to be transparent in what I did right and what I did wrong. So anyway, we're gonna get started here on Monday, which was the 20th. We're gonna go over the Coinbase calls, which were swing that I did not enter, but I posted that I did enter. But in fact, I somehow ended up on the UNH option chain and entered into UNH 365 calls, which also did work out. But the Coinbase calls was the one I posted, so I want to go over that. So Coinbase was pretty simple. I'll show you what I saw over here. So you could see here that coin for the previous week before the 20th was in a bearish channel. Now, this is the 30-minute chart, and you could see on Friday specifically, we had a very strong bullish momentum. What caught my attention in this is a few things. One, we broke out of the channel, right? That's pretty simple and easy to spot. But the reason why I say strong bullish momentum compared to previous days, right, like this and like this, is because we had a pretty solid continuous move upward while our retracements intraday were pretty small and insignificant, right? You could kind of see the replication of that on Monday the previous week, but near the end of the day is where we got pretty weak. Tuesday came along, but we had a pretty strong retracement in the early day, and then near end of day we had another retracement. So you could see Friday was a bit of an exception because the momentum was pretty strong, right? And also, if you keep an eye on volume, the opening volume on on Friday, sorry, was pretty something I just really want to keep an eye on. So we had the breakout, and not only do we have the breakout, but we also broke above and we maintained above this level I was looking at, which was 326.91, which is, if you saw over here, was the top of this range back during this area. So, not only did we have that, but we had a really great daily candle that I like. I like that we only had. Sorry, wow. Um, we had a very strong body, bullish body candle, but we had a very tiny wick, and I like seeing wicks on my candles, especially bullish ones, because what it represents to me is the fact that buyers were strong and way stronger than sellers because they were able to push the bears out even though the bears were present. So Monday came along. These Coinbase calls worked out pretty great. I think they went to $6.40. That's the high of what I tracked it to, which was pretty nice from our entry at 335. Well, most of the people's entries are not mine, but that was a trade idea I put out, so I need to take responsibility of it, and it worked out pretty well. So I'm glad that setup worked out for you guys. Next setup we're going to go over to is the day trade I took on AMD on Monday itself. AMD was trading pretty great during, well, actually the past 3 weeks, day trade wise. Volatility has been in it definitely for sure. So we're going to go back to the 20th and recall what exactly happened here. So If you guys have been using the ribbon, which is the indicator I put out, the reason I put it out is because all it comprises of is the 10, 20, 50, and 200 SMA, which changes based on the time frame you're looking at, and you could also change the SMAs you're looking at. But these are the SMAs I like looking at. I said looking at like 10 times already. So what this does, and the reason why I put this out, is because it shows for beginners and people who are still developing a trading strategy how great trading with the trend is. And it's very easy to trade or build trading strategies with SMAs, or in fact this ribbon. So when I coded this, I kept this in mind, and I wanted to make sure you guys were able to visualize what I'm seeing, kind of, right? But anyway, going back to Monday. So AMD, setups like this I really like when it comes to bullish setup, is when we have a gap up at open, and then we have a little bit, I wouldn't say struggling, but we hesitate. So in this fact, we gapped up, not that much, but then we had a huge retracement back into the 10 SMA and the 20 SMA, right? The 10 SMA is the blue line, purple line is the 20 SMA. And before I continue, if you do want to have this indicator, it's absolutely free for you guys, of course, because I believe in having a lot of things here for free. You just need to search up biryani, and you'll see Bishop Chicken Biryani ribbon. Why is the name biryani? Because biryani is the greatest food of all time, and it's constantly on my mind, and I probably eat it like 4 times per week. But anyway, I digress. So not only did we hold the ribbon, right? We also held 234.72 level, which was the previous low of this consolidation we had over here, and also the previous low from Friday, a previous high from Friday, which I usually like paying attention to. So whenever we have a strong gap up, right, and then we have a retracement, I like looking at the previous day's high to see if it holds that high and bounces off of it. This is actually a great strategy and very simple strategy that I've used to trade a lot of bullish setups during a bullish market, which we've kind of been in. And it could be used very well on AMD, Microsoft, Meta, Tesla, and SPX actually. It works really great on SPX if you use the right entry points and right indications. So I've also talked about how the ribbon, right, this shaded area over here, which by the way, you can enable 2 of them and select which ones you want to look at. But all this does is just show you the shaded area and the space between the 10 SMA and the 20 SMA. So why is this important? Well, I believe this is important because whenever the 10 SMA gets farther away from the 20 and this ribbon is shaded green, what this does is, I call this, well, it's just basically ribbons expanding. I'm not calling it anything. I'm not, an inventor here. So when the shaded area expands, all that represents here is the increase of strength in the trend, right? Or the volatility in the trend, because this is not like the RSI where it measures the strength of the trend, right? It's just showing you that the trend is moving pretty strong, because the 10 SMA, right, is more reactive versus the 20. So if the more reactive SMA is moving up a lot quicker and farther away from the 20, that means the short-term price action is very bullish, or whichever trend you're looking at. So we had the expansion of the ribbons over here, and we had a retracement into the ribbons, which I've talked about being you could look at it as a dynamic support, or not dynamic, dynamic supply and demand zone. So we retraced into it, bounced off of it, and we also held the previous high. So this was a great entry point. I think I entered on this candle over here after we had a nice wick to the downside, and then we started pushing upwards. These contracts went for 80%, so it went up all the way over here. I did in fact delete, I don't know why, but I deleted the fib extension that I was using. And if you guys know me, I love using fib extensions. I think it's one of the most important tools, I believe, right? It's my opinion, but I believe it's one of the most important tools a day trader can use, or even a swing trader, or any kind of investor at that fact, because it gives you very valid levels for trimming. And I like looking at those whenever I take a trade. So you can see here 239.73 was where I wanted to trim majority. So We rushed up here. I think at this point it was about 40%. So I took a decent amount of trim over here, and this push upwards pushed it up all the way up to 80%, which is a really nice trade. A lot of people were in this, and I'm very happy you guys were. Moving on, we had GME, which, yes, it's different than the trades I usually take. I don't usually take GME kind of trades because, sometimes it just does not move the way you want it to. But I could not resist the setup. You could see here that heading into Monday, we've had consistent higher lows. You could see, right, I'll just draw them out for you. And the push up on the end of Monday was really nice and really attractive for me to look at. I just cannot avoid that. So, I mean, GME, if it moves, it really moves. But of course, as we know, if it doesn't move your way, it really does not move your way. So it ended up gapping down the next day on Tuesday. Not sure why. The setup was really great, but things just happened. So we gapped down, but we held a previous low all the way back on the 17th of October, which was a Friday. So we held that. You can see this is like a mini demand zone. We held that. We pushed up, and at this point, the contracts are at break even. Maybe I could say that I could have averaged down here. I was contemplating it, but I was literally looking to do it right here on this candle. But this candle shot up really quick. I'm telling you, like the candle opened 3 seconds inwards, it just shot up and it just stayed here for the next like 4 minutes. The candle was alive for. So I couldn't average down where I wanted to. And I would have definitely, like, once it reached over here, I would have scaled out. But that's just not what happened, right? And at this point, it reached over here. The contracts were break even, but I did not exit at least part of the position. Should I have? Maybe I could have realized the fact that that this was a very volatile stock and I should have taken it, but taken a trim, but I didn't, right? I didn't take it at break even. And instead, what happened was it ended up rejecting in weird fashion and just ended up selling off like crazy. So you can see here, I cut out, I think around negative 26%. So it was around this area over here where it just was not really performing really well. But the funny thing is, some people actually held on to this. So if we go back, there's a 30-minute chart. If we go back, this is the day I entered. You could see it went down all the way over here and it pushed right back up, all the way back up to where I actually wanted to trim originally, which was 2370 on this fib retracement. And a few people held this, which is crazy, but I mean, congrats to you guys. But I just was not going to hold through like whatever 50% or 60% drawdown. I'm not exactly sure what the contracts went to, but that's just too big of a drawdown for me to hold. So that's what happened to GME. It was a loss in the end, but for some reason ended up just really bouncing really hard. And I guess even though the entry looked great, my entry was not the greatest. So I'm not going to go over the Microsoft call because that was a pretty small loss. But what I will, and I remember that trade, that was just a trade that just, there was no reason to why it rejected. But let me see. The next trade we'll go to is Nike. So Nike was a really nice day trade here. So let me bring that up. This is a very easy setup. So if you guys know me or if you don't know me, a pattern I like trading is rally-based rally. It's one of the most, I would say, one of the more dominant patterns out there, where you get a rally at first and then you get a base, which is no other, nothing different than just consolidation, and you get a breakout afterwards. And the whole point is to catch the second wave up, right? Because usually the first wave up is sometimes hard to catch or it's very quick. So the second wave is usually what I like catching. So you can see here, you can see the same thing. We had a rally up and then we had a consolidation where we formed a base. And on no, this was on Tuesday. So on Tuesday, I took the 69 calls for this breakout. So the time I entered was, I'll show you right now, it's right here. So I entered right after this candle close. Um, so the candle that popped up right afterwards was where we started pushing up above here. And I just wanted to take the risk on this because one thing that really, enticed me about this trade was the opening volume. You could see here that the opening volume was pretty nice and pretty high. So I definitely wanted to take a risk in trying to trade the breakout. And you could see here, before the breakout even happened, the ribbon started expanding. And not only did it expand, but the 50 SMA was also below the 10, 20, and 20 SMA on the 5 minute. So I took the calls right over here, right before the breakout. We entered at, let's see here, we entered at 54 cents, and this was actually a pretty great trade. This went over 80%. And you could see here, as you guys know, I love my fib extensions. I drew it out here for the trade I took. And you could see the one thing great about fib extensions is I took a trim over here, I think it was around 50%, and this second trim here was around 80%. But the great thing about fib extensions is it gives you targets, but it could also be used as future levels. As you can see, it held um, not only once, but once, twice. So if you guys don't know fib extensions, I have another video about it. I definitely would say uh, this is one of my more favorite tools to use. It's very easy to use, and I think it's very important. So very simple trade, rally-based rallies. What I was trying to trade. It was a breakout, and the validation point is pretty easy, right? If you get a rejection over here, well, and it breaches below the 10 and 20 SMA. One, there's a high likely chance that you're going to hold this and bounce upwards. But if it doesn't, then I already know that this trade is not going to work out. Another great factor to this is the fact that the 200 SMA on the 5 minute was also below the price action, which suggests that it is bullish, right? Usually it's just like VWAP, right? If the VWAP, for example, is above the price, it could be bearish, right? Because your price could go up and reject that. Versus if it's below, right? If this is the 200 SMA and the price is above it, you would you view it as bullish because that is a dynamic support that it could possibly bounce off of. So that's why we took Nike. Those did really well. Now moving on, CCL. Well, CCL unfortunately was a really great setup. It's just a definition of, even a setup could look really great and it just does not work out. So let me bring up what exactly I saw here. So on the 30 minute, you'll see what I saw. So we had a really nice move upwards on the 22nd. So on Tuesday. And no, this is Wednesday. No, this is Tuesday. So on the 21st. And you can see we had a really nice move up on the 30 minute. We broke above this top of consolidation. And there was a high chance for a continuation. As you can see, the daily candle looked really nice. We held the 20 SMA and we bounced off of that. But what happened here? Well, I can't really tell you. The next day we opened up pretty subpar. The high of all the way up here at 30.39 was not actually really rewarding because we retraced first before I think we retraced first before breaking out. And by this time, the contracts reached over here. The contracts were like, I think they were only up like 10% or something like that. So I don't like trimming always at 10%. Depending on if it's a really good area to trim. Maybe I should have trimmed. It's really easy to say hindsight that I should have trimmed. But we rejected off the 50 SMA on the daily and also the top of consolidation back over here in the month of, when was this? What's before August? July. So I could have trimmed here. I should have trimmed here, but that was just 10%. I wanted to risk it to see if I could trim at like 25 or 50 because I personally believe in winners outweighing the losers. But hey, maybe I could have trimmed here. Um, Whatever, right? So CCO, really great setup, just did not work out, and that's true testament of how sometimes setups could be looking really great, and just the market just does not continue. Moving on. So the next trade I want to go over is Meta. So Meta we got on Wednesday. Yes, Wednesday the 22nd. So this was a really nice trade, even though it went for 30%. The great thing about meta contracts is its intrinsic value and delta is already pretty high for the contracts that are near in the money. So what that means is the contracts are naturally expensive, which means the returns, even though it's just like 30% or 40%, the contract value and the gain you get money-wise or monetary value is pretty high. So another pretty simple setup I took, this is very similar to Nike. We had a rally and then we had a base. We were consolidating, and this is the 22nd right over here. So you can see here on the 22nd, I had a level I was paying attention to, which was 733.64. So we started opening up very bearish, but then we had a really nice bullish candle. I saw this and I like usually going on the opinion of the second candle. So, especially if it's decisive, right? This is a very decisive bullish candle. We had a nice wick to the downside and a very strong candle. I mean, body. But I entered on this third candle over here. I was in some drawdown. I think it was about almost 20%. Uh, but one thing that was pretty good was the fact that the 50 SMA was below the price, which worked as support and kept the candle closing above it. And you could see the return that happened afterwards. So we had two really nice candles upwards, and this resulted in like 30%. The true 30% was reached after this random candle over here. But one thing you could realize is I used to trade Meta a lot more, and the price action just has not been as clean as it used to be. And there's been also a decrease in volume and how much Meta has been trading at. So it's unfortunate, but I mean it kind of makes sense. But anyway, so you could see rally-based rallies is what I trade over here, and it resulted from the contracts going from 255 to 335, which was an $80 per contract, which is pretty nice. Next trade, which was the bigger trade that day, which was IWM puts, very simple setup. You could see that this was the low on Tuesday, and here Wednesday came along. You can see the ribbons was pretty red, which all it simply is selling is that the trend is suggesting bearish continuation. So we, I entered right off this after this candle closed because we closed below that level, and I don't usually like chase. I mean, I'll be honest here. This was kind of a chase. Was it? We'll just. I don't like trading breakdowns, like trying to take the breakout or breakdown, but this was just something I wanted to take because not only did we close below the candle, the level I was looking at, also we held below the 10 SMA on the 5 minute. So this was pretty bearish and the ribbons were expanding, which shows the reactiveness of the 10 SMA, which is suggests the strong movement. So I entered these puts over here. This move downwards actually resulted in about 30%, and this move upwards took the contracts back down to negative 15. But we had a nice rejection off the 10 SMA, and you just saw exactly what happened here. One big reason, I don't usually like taking puts. I just prefer calls because calls you always end up running a lot more and work out more than puts. But you could see one reason I like taking the puts, additional to what I already talked about, was the fact that we had a huge gap over here on IWM, right? From the price of 243 all the way up till 246. So I wanted to test this gap downwards, and we pretty much filled it on Wednesday itself. So these contracts went from 54 cents all the way, what? Hold on. Nope. They went from 50 cents all the way to $4, which was over 700% for these contracts. In fact, I believe it went to 800%, but I just did not hold the contracts past 700, which is pretty rare of me, but I did size light on this IWM compared to my meta, so I just did not have many contracts to hold. So IWM, really great, really huge trade for the week. But yeah, next trade I wanted to go over was IBM. So IBM, one of my favorite tickers to trade when it comes to earnings. So if you guys recall, last year we had a IWM earnings trade which went ballistic. Uh, but I um, really wanted to trade IBM earnings. I was very bullish on it just based off the chart. I'm not really a whole fundamental guy, but I really like the chart on IWM. I mean on IBM, and I wanted to take it. So earnings was on this day itself on Wednesday after market close. So I decided to take it, and you could see here that IBM gapped down 8%. But the crazy part is it held a 50 daily SMA, and it held this level I had at 264.32. I kid you not, I promise you this level was here before this even happened, and the breakout was just unreal. So the crazy part was on this day, right? So on Thursday, the contracts opened up at negative 95%. So they went all the way down to like 0.05 cents, which was $5. And we entered all the way up at $3.70. These contracts not only regained their value, but they went all the way up to $10.55. So this was a 185%. So why am I showing this trade? Well, I'm not a big guy who advocates for trading earnings, but when there's a really great setup prior to earnings, I can't resist it. But what I do is I trade a lotto size. So what that means is I trade a very small portion. So money I don't mind risking. Also, in fact, the one thing that helped was the fact that we had the Meta and the IWM trade that day. So I was very profitable. So I used portion of those profits to fund the IBM trade. And the whole intention of the way I trade the whole way I trade lottos is I risk it for zero, right? That's why I don't trade lottos as much. I risk it for zero, which means I don't care if it goes to zero, which gives me a lot more room to work with and allows the trade to work out, which in this case it really did. Now, IBM has been a really strong stock. You could see it's just been this very strong uptrend. It's not as traded as much, let me take that back. It's just not talked about as much, but I love it so much, as you could clearly tell. But there was just such a great setup. We had a nice impulse wave and we had a consolidation, and I thought to myself, okay, if we if we break out here, this is going to be a great breakout because we've had a double top essentially over here, right, where we had the first top over here and the second top over here. So whenever you break a double top, you usually are followed by a nice push upwards. So that's what I wanted. You could see the funny thing was IBM. So I was right. Essentially, IBM beat top and bottom line, but it just the forward guidance was just not that great. I'm not exactly sure what it was. I'm not a big fundamental guy again, but dang, oh my goodness, did this freaking rally happen? Funny thing was, it took all the way till Friday for these contracts to reach $10.55. Um, so yeah. Anyway, moving on. We only got a few more trades left. So Meta, trade I took on Thursday again. Let's see, I took the 7:45 calls on Thursday. Let me see here why I took it. Oh, pretty simple. Very similar to setups before. We had a gap up, right? And then we had a very hesitant candle, which is a candle I really like looking after, right? Because when it's just hesitant over here, that means there's any possibility. And usually, when it means any possibility, what usually follows is a continuation of what the trend was beforehand. So since the trend on Wednesday for Meta was pretty bullish near end of day, my sentiment was definitely bullish. So I saw here that the ribbons were still pretty strong heading into Thursday. And after this candle, I just had to take the risk for Meta calls because my invalidation is very, very simple here, right? We have yesterday's high, which was not yesterday's, but Wednesday's high, which was 733.64 again. And if we get below this and if we get below 20 SMA, that's my invalidation point. Depending on how low the contracts are, maybe I could get out if it gets and closes below the 10 SMA. That's where risk comes in, your own personal risk management. But I had an idea of what I was going to look at. So we got it over here, and oh my goodness, did this breakout pay so nice. This went from 282 to 450, which was, what is that, $170 per contract, which was roughly 70% on the 60% on the contracts itself. So again, even though it was only 60%, since these contracts of Meta are naturally expensive, the delta was so high that the return we got monetary wise or dollar sign wise was pretty high. So very simple setup again. Held yesterday's high, not yesterday's high. I keep on saying that Wednesday's high, and we also held above the 10 SMA and had after holding a very indecisive candle. So very simple. Now, all right, Google. Well, this was Thursday itself. This is before the fateful Friday that I need to unfortunately get into. Google ended up working, but not in the time frame that I got it. So I got the calls right on this candle over here. So I got a midway. So these candles were up. I think they were up like 15% or 10%. I didn't take a trim there. I was getting very busy. So what I did was I set an SL of 15% at the head out. So I set a stop loss for 15% and a not take profit, but trim at 25 and 50 and 75%. So I wanted to break out up into this area over here. You can see I drew a fib extension So I actually took, okay, so I'm wrong. I took the call right here. So I took it after his candle close because I want to see a continuation up over here. Now, my mistake, so I could say that I genuinely made a mistake on this. So my mistake was I traded Google, and that's simply it. One thing that's what I've learned is it's very important to trade the leaders when it comes to trading because you usually get a nice momentum upwards. Google has not been a leader the past 2 weeks, and in fact, even on Thursday itself, while everything was running like Meta, Amazon, Apple, and other tech stocks like Nvidia, Google was actually lagging behind. So my mistake was I got into the laggard stock, and I expected the same momentum to continue. But that was my mistake, right? Even though it was a great setup, I did the mistake of taking the lagging stock, and eventually the volatility kind of dried up in Nasdaq, and Google kind of retraced after that. Lo and behold, of course, on Friday, it ended up gapping up like crazy, and some people held their contracts, and these things went over like 100%. So congrats if you did hold those, but if you're like me and you took these contracts, we got out for negative 15%, so it wasn't really a big loss. But you know, money is money lost, right? And even if it's a dollar lost. So I could have avoided this by realizing there's a lagging stock, but I was trying to be optimistic here, and that was my fault. Now, all right, time to get into the unfortunate Friday, which was the 24th. So we traded two sets of meta calls. I don't know if to really, I mean, I'll be honest with you. I've been thinking about it yesterday, day before yesterday. I try to think like, okay, did I do something wrong? And the thing is, like, I was following my setup, right? What we had here on Friday, where's Friday? Friday open was an indecisive candle, and we started pushing upwards. Now, the biggest fault I made was I entered way too early. I could have waited for the candle close and judging on the candle close, I could have taken an entry. If I waited for candle close, I would have realized how bearish it was at open, how we just plummeted. The second mistake I did was I did not factor in yesterday's trend into this gap up. If we were like sloping upwards and we were pushing upwards on Thursday, then if Friday were to open up the same way, even if we had a retracement, we still had the yesterday's previous trend and the day before high to kind of hold a support, but that didn't happen, right? And so my fault was I didn't factor in that the day before's trend was not strong, and I also entered in way too early. So I don't know what it was, but I think the IV was just very high on meta that week, especially on Friday, because these contracts knifed. When I say they knifed, they knifed. This move down was 20%, and this move downwards was 35%. I put here on the log that I got out at 32. I was very lucky because I saw right after I got out, these contracts went to like negative 40% in a matter of seconds. So I would say that that first entry was my fault, and I will admit to that. But where was my second entry? So my second entry was right here. So it was after this candle where we had this kind of indecisive. You could see we had a huge wick to the upside and the downside, and a very kind of like a bearish body. But overall, it's indecisive because the wicks are pretty huge, upwards and downwards, right? So was it off this candle? Let me, oh, hold on, let me figure this out. So the second entry for the meta calls was a 942. So that's where, like, again, I could see the mistakes I made because I could have easily waited for candle closes and I did not. I didn't wait for candle closes, and that was my biggest fault here because I entered on this candle. So 2 minutes into this candle, we were actually moving upwards. And my tiny little witty brain thought at the moment like, oh, we're bouncing off the SMAs here and we're gonna push back upwards. Huge mistake, right? You could see this knife downwards was just pretty bad for contracts. The contracts went to negative 50%. Is where I got out. You can see we had two consecutive candles red, and it was just too much for me to hold on to. Lo and behold, of course, Meta ended up retracing, but I can't look back here and say, oh, my sentiment was right because I made the mistake of taking horrible entries because I didn't wait for a candle to close. And I could have waited for the candle to close, and I could have sacrificed maybe 10% if it ended up going my way. But if I waited for the candles to close, I could have avoided these two trades, and it honestly would not have been as bad as a Friday as it would have. So that was my mistake there. Unfortunate two sets of meta trades. I'm usually not that inaccurate with meta, but I just was, and that was purely my fault. I could have waited when I didn't, but I didn't, and rest is history. So IWM, the fault I made here. So I entered, I believe, I entered. Where did I enter? I think I entered one of these two candles. So let's just say this candle, right? So I entered on this candle right over here, and I entered at the start of this candle. So we had a little creep upwards, but it was very slow, so the profits were just not appetizing. I think they were like a little bit less than 10%, so I didn't take a trim. But you could see data came out at 10 a.m. So we had a huge red candle, and this is where the contracts went down to negative 37%. And I was just really pissed off already because of my bad reads earlier, and I got out at negative 37%, which I don't know if I should say is responsible or irresponsible. It definitely wasn't irresponsible, but I could have looked at the fact that it was a 0 DT, that we had a previous level here that we could have possibly held, and I could have waited for the candle to close. And right afterwards, these same IWM calls I got out for a loss went up to 80 cents from my entry at 59 cents. So basically, the moral of the story for these three trades, the two meta and the IWM, is I could have waited for the candle closes to make decisions. For meta, it was the entry point, and for IWM, it was the closing point. But yeah, so that's I took IWM because I wanted to see the breakout over here. We had a very strong opening candle, and I wanted to see the continuation of momentum. But that just didn't happen. And if you guys really want to quickly see, I'm saying that like as if I have a live audience right now. Um, so meta, what I was trying to get at is a breakout out of this lower high, not lower high, but this previous low over here, because then would again invalidate a double top, which would be a really nice breakout. And I wanted to test 746, and I thought this was the day because we had a nice gap up at open. But that just didn't happen, right? And the funny thing was, other Nasdaq stocks were running, but Meta was not. So that's what I was looking at Meta and IWM. The last trade that I took, which I wouldn't say this was just one of those setups that looked great but just didn't work out, was CrowdStrike. So the mistake I made here was just trading CrowdStrike outright, because the contracts are just very risky to trade on a Friday. These things, I kid you not, I entered out right after this candle closed, so at the opening of this candle, and dude, like, my goodness, this single candle itself made it go down like 30% just because of the spread on it. And of course, people entered with me too, so that didn't make it any easier. So you could see that what I was trying to trade here was this ascending triangle, and you could pick on me if you want for trying to trade at all-time highs, because I'll show you here that CrowdStrike, this was all-time highs for CrowdStrike. So let me pull out pause. So you can see here that this was a gap up into all-time highs here for CrowdStrike. And the thing is, when you reach all-time highs, you don't just reject and that's it, right? You usually end up having continuation. So I thought, okay, we're having an ascending triangle here on CrowdStrike, and we are going to have potentially a continuation upwards. And you could see the things I was looking at, which is like the ribbons, for example, were showing exactly that. But, CrowdStrike just did not work out, and the setup ended up not working out, right? Got invalidated pretty quickly. Um, but would I would I not take this trade if I was still back in the same situation? I didn't know this was going to happen. I honestly can't admit that I would not take it because this was a good setup, and I'll show you exactly why. Everything's always going to look easier, you know, 2020 hindsight, but if you saw a setup like, okay, let me rephrase that. If I saw a setup like this, I will always want to risk it because I like trading bullish setups, and I know regardless of it being at all-time highs, usually you get a continuation upwards before rejection. So this was not all-time highs, right? Let me just make sure before I talk out of my ass. So no, actually this was all-time highs. but I wanted to see a continuation because you had a really nice close on Thursday. So when I have a really nice setup like this, I will always risk it because again, I made this very thorough in my message that I put on Friday. I am trading according to my risk tolerance. So I saw that. I wanted to risk it. It was a good setup. I'm still gonna stick by that setup. I don't care who says I shouldn't be trading at all-time highs. I've done it many times over many years, and it's worked really great for me. And this time it just did not work out. And if this was not a Friday, if this was Thursday, and if CrowdStrike didn't have the wide bid and ask spread on the contract that I got, um, it would have been maybe a 20% loss. But this went down to being negative 40%. And I guess the only mistake I made was trading an option chain that was very, I would say, I wouldn't say it was illiquid, but just very big spread and not as liquid as it should be. So yeah, those are the trades I took this week. Usually I trade futures, but I did not have time to trade futures this week. We would have been spot on futures. We were usually pretty spot on futures. Our win rate's very high, but yeah, I mean, those are the option trades I took this week. I hope to post most of these recaps out because I believe it's beneficial, even if you guys watch or don't watch it. It also helps me looking back at what I did. Because even 12 years onwards, heading into 13 soon, um, it's good to look at what I did wrong because the market is always constantly changing and things that worked 2 years ago don't necessarily work right now. So I need to see what I did wrong and see if I need to adapt or figure out mistakes I did so I don't repeat them again. So hope this helps. I hope you guys have a great Sunday because today's Sunday. And again, I can't be sorry enough about Friday, but look, I followed my risk and usually I'm very spot on. But I'm gonna have out of 252 trading days in a year, I will be red on probably 4 or 6 of them, right? Yeah, Friday ended up being really red. But I will say one thing, risk management is very important. And I will say that the week I had prior, so the days I had prior to Friday for that week itself was very green for me and I did really well. And because of that, um, the Friday losses were big, but they didn't set me negative for the week. And they just set me negative for the day. And that's the most important thing, right? Risk management. And yeah, anyway, I'm going on already for too long. It's my first video in a while, but I hope you guys are doing well. All right, I'll see you guys later. All right, peace.